Hi, I'm Larry Berman, and here's what's on my radar this week. Another very strong week for equity markets. It seems like we're in a melt-up phase here. Fear of missing out is trumping out over caution. A lot of excitement out of Washington. It looks like Nancy and Mitch are going to come together on a continuing resolution or an omnibus type bill that's going to be a stopgap funding for 6 to 12 months, in that range. I think Biden wants a longer term on this, something like $900 billion. So not what either side wanted, somewhere in the middle. I think the motivation here is a relatively weak U.S. employment report that we saw for the month of November, leading to a lot of economists to suggest that December's we could actually start to lose some jobs. So there's a lot of motivation, even in the lame duck session here, to get some relief. Now, that's interesting because what we're hearing, that during the shutdown, the amount of central bank largesse backing government stimulus has led to a surplus in savings of something like $1 trillion plus in the US, and that's going to provide a lift to spending. This will be the first time in history, folks, that we've seen a recession with massive job losses where incomes for the average person has gone up. But that average person is a misnomer. The bottom half of the K are not feeling that. All that wealth and all that savings is in the upper part, and for the most part, those people are still working. So we do have a bifurcated economy. Right now, markets don't care about any of that. They just seem to care about stimulus. Wall Street keeps boosting targets, and this is really pushing or blowing the bubble, if you will. I don't know where it's going to end. My indicators are telling me we're extremely frothy. We should be proceeding with caution at this point. And with that in mind, when it comes to recommendations in terms of bull and bear picks of the week, on the bear side, as things reflate, commodities have taken off. That's a big part of a reflation trade. But on the bear side, technology has been underperforming, even though the NASDAQ made a new high this week. So bear trade of the week, you want to buy technology, but you want to buy it on a pullback. So ratio put spreads are the best way to do that. Look at a March 290, 275, 1-to-2 ratio put spread. Earn a 1% credit on that trade and wait for the dip to buy. So nothing better than getting paid to have a bearish bias. So that's the bear trade of the week. On the bull side, playing the reflation side, the one sector that still has a lot of upside potential. Base metals have rallied. They're a little overbought here. Energy has rallied back, but it's not overbought relative to the summer highs. XLE, the broad US energy ETF, has resistance in the 47 to 48 range. Look at a March call spread, long a 42 to sell a 47.48. That's going to cost you some money on the call spread, but you have a 3-to-1 return to risk ratio. And if something bad happens and you see downside, your losses are limited as opposed to going outright long. So I like to proceed with caution here. Options are a great way to do that. That's it for this week. Have a great week, everybody. Stay safe. And remember, subscribe to our YouTube channel and click on the alerts so you know that when we have new content out. Be well.